Traders, welcome back to the most important episode of the week. In today's video, we're going to talk about how to calculate risk. But specifically, traders, I want us to dive deep into the lot size. In other words, how to calculate what lot size you should use on each and every trade. Now, the general misconception that we get when we're still trying to figure out this trading business is to risk a 0.01 if you are trading a $100 account or less, or risk a 0.10 if your account is $1,000, or trade a one lot size if your account is at $10,000, or multiply that by 10 and risk a 10 lot size if you are trading $100,000. Now, when we're first presented with this method of trading, it looks like an easy approach to the markets, right? We don't need to calculate anything. We just need to know that if my account is a $1,000 account, then I just need to stick to a 0.10 each and every day. But with experienced traders, we get to understand that nothing could be further from the truth, right? In fact, each and every trade that we take in these forex markets, we must calculate it separately, because each and every trade that we take will differ based on our account balance at the time. It will differ based on the amount of pips that we are risking, and thirdly, it will differ on what percentage of our account are we comfortable risking. But the point here is just to pick your risk tolerance and stick to it. So in today's video, we're going to dive into the numbers and start approaching trading like a business. Without wasting any time here, guys, if you go to Google and ask how to calculate position sizing, you're going to get some math that you don't want to deal with as a trader. I mean, trading is stressful enough as it is. We don't want any more formulas to deal with, right? What I need you to do is to go to my FX book. Now, my FX book is a free platform, guys. I'm going to leave you a free link down below. You don't have to pay anything for my FX book, but you can do a whole lot of things with my FX book. You can check the type of news that are going to affect the market at that current day that you'll be trading. You can also track your performance. As you can see, my profits are shooting through the roof here, traders. But most importantly, in today's video, I want us to focus on FX calculators. So you're just going to click FX calculators and click position size calculator. This is where you're gonna calculate what lot size are you gonna use on each and every trade, because if you're one of those traders who are using the same lot size on each and every trade, I guarantee you are not profitable, because professional traders approach each and every trade separately. Now, this position size calculator is really easy to use, guys. We've got a couple of boxes that we need to fill in here. The first one is our currency pair. Now, this is self-explanatory. It's just the currency pair that you'll be trading. If you're trading something weird like Euro TRY, I don't know what is that, but if you're trading something like that, then you can go ahead and click that. But for example purposes, let's just stick to Euro USD, right? So the second box is our currency pair here. I don't know where you live, guys. I live in South Africa, but I like my currency in dollars, right? Sometimes I could be withdrawing something simple as a $200, but when it hit my account and it converts to local currency, yes, it's gonna be a Hennessy day, right? But jokes aside, guys, the third box is our account size. Now, it goes without saying that if you're a real hustler with a $100 account, you can't be risking the same as somebody with maybe $5,000 account, right? So I just purchased a young 5K account. It's my first challenge account, and I'm tracking that, guys. I'm documenting everything. I will show you how's that going. But for that reason, let's just say your account is $5,000. So you're just going to punch that in there. The next box that we have is our risk ratio percent. Now, this is the percentage of your account that you are comfortable risking, right, on each and every trade. So the general rule is to not risk more than 2%. So we're just going to use that, right? Let's say you are risking 2%, and the third box is our stop loss. Now, this is where each and every trade is going to differ, right? Because each and every trade will have a different stop loss. If we go to my charts here, we are looking at the New Zealand dollar USD. As you can see, beautiful trade there that we smashed take profit on a Friday. Now, it's a Sunday today, the 13th of August, 49 minutes past 2 in the morning. And I'm back with another banger. But if we're looking at this trade here, I'm just gonna grab this mini ruler that you see on the left here. This is a trading view chart, and if you don't know trading view, I believe your problems are much bigger than position sizing, right? But I'm just gonna grab that and calculate how many pips did I risk on this trade. So I'm gonna click my entry and I'm gonna drag this thing back to my stop loss, and I'm just gonna see, okay, Okay, we can't see anything there. Let's just drag this thing down. I'm just gonna click this ruler again, and I'm gonna click my entry there, and I'm gonna drag this thing to my stop loss, and I just want to know how much am I risking on this trade. Now if you check there on top, there are 3 sets of numbers, right? The first set of numbers start with a 0.00. the second one is in commas and is 0.69%. now I need you to fix your eyes on the third number, which is 42. right now that is the number of pips. As you can see, if I keep moving this thing up and down, it keeps changing based on the pips that we are risking. So on this particular trade, I was risking 42 pips, right? So we're going to come back to my FX calculator here and put in those pips that I was risking. So I was risking 42 pips, not 44, right? So I was risking 42 pips, and we're just going to calculate what lot size should we use if we are risking 42 pips on a trade. And let's calculate. Voila. As you can see, if we have a $5,000 account and we are risking 2% and our 42 pips here, we can see that if this trade goes against us, we're going to lose $100. Now what you need to ask yourself is, am I going to be comfortable losing $100 just on one trade? Because if you're not comfortable, then you just need to come to your percentage here, right? And just reduce your percentage and just reduce how much you are risking on this trade here and recalculate. And as you can see, the amount that we're going to lose should this thing goes against us has decreased to a $50. But more importantly, also our lot size has changed to a 0.12. So if we go back to 2% here, please pay attention to our lot size there. You see it's 0.12 right now. If we click calculate here, now we are risking 2%. Now it says we should risk a 0.24. But what if we were not trading the Euro USD? Let's say we were trading something else, maybe Euro ZAR. We're going to calculate Euro ZAR. We are still risking the same 2% and it's 42 pips. Our lot size has changed to 4.51. So imagine if you were trading the Euro ZAR with the same 0.24 lot size. It was not going to work out, right? So calculating how much you should risk on each and every trade is really important, because it's going to keep your losses on point, right? You will know that each and every trade I can't lose more than $100. But if you keep using the same lot size, different pairs, then you're not going to be profitable in the long run. So I want to show you an example, guys, here looking at my own trading journal. And this is what I want to mention, guys. If you don't have a trading journal, I would really encourage you, just start journaling your trades and you will see how much your trading will transform. Trust me, guys, I was one of those traders who used to say I will start documenting my trades once I start making money. But little did I know that I had to start documenting my trades before I can start making money. So this is my trading journal here. You can see that on the 31st of July, I took a trade. It was a Monday, 4 p.m. The pair was Euro USD, the position was a sell, and I was risking 2%. My stop loss was 29 pips. So let's just go back to our position size calculator and punch in these numbers and see if I do practice what I preach, right? So position sizing, I'm risking, I've got $5,000 account, I am risking 2% of my account, and my stop loss is 29 pips, right? And we're just gonna hit calculate. So you can wait a minute. No, I can't be risking that on the Euro USD. Oh, that's because this is a Euro ZAR. So you see how important it is, guys, to risk a different lot size on each and every trade, right? I'm gonna click recalculate there, and as you can see, it says my lot size must be 0.34. Let's just go back to my trading journal, and you can see I risked a 0.34. Now on my trading journal, I also include a screenshot here so that anytime I can just click and see what was going on that trade. What was the trade? As you can see, it was a double top here, beautiful smash take profit there. I also include the reason for me taking the trade, and we can just go ahead and read why did I take that trade. Okay, it was a double top at the same time when DXY was giving us a double bottom. If you guys know me by now, I take my trades based on the DXY. I also made a lot of videos talking about it. Really, you can just spend some time on my YouTube channel and just go through these trades. But as you can see there, I also include the reasons for taking my trade, and let's just see what was my comment there. As you can see there, I made a 54 pips, and that doesn't make sense because for 29 pips I should have made at least 60 pips or 90 pips, because my risk to reward ratio is always 1 to 2. But let's just check the comments and see why did I make 54 pips there. It says I could have made more. Of course I could have made more, but I focused too much on how much was floating in my account, and I just couldn't resist to close the trade early. I paid for it by seeing the market going straight to my direction after I had closed the trade. Lesson learned, I must be patient. Now, I don't know if you relate to this, guys. Sometimes you close a trade early because you panic, or you start paying attention to the money floating on your screen, and just after you close the trade, it goes in your direction. Let's just go check that trade again. Look at that. So I closed my trade here. As you can see, it says take profit here, and after I closed my trade, it went straight to my take profit. So keeping a journal is really important, because at a glance I can see that I lost 41 pips here. What was happening? Let's just go back. On this trade, it was the 9th of August, right? On the 9th of August, it was a Wednesday, 11 a.m. I took a GBP USD pair. It was a sell, and I risked 2%, and my stop loss was 41 pips. Now it says here I lost that, but I can just go back here. I can just click and go back to the trade and just see instantly why did I lose that trade. Okay, so as you can see, okay, it hit my stop loss and it went straight to my direction, but I should have broke even on this trade here, because I mean it moved a couple of pips to my direction before it reversed on me. So why didn't I move my stop loss there? Let's just go back to my trading journal and understand why didn't I. Okay, let's just check the reasons first. So the reason for me to take the trade was triple top. The market is failing to break to the upside, and DXY had just made a higher high, signaling strength on the dollar. So this is why I took the trade, right? But I just want to understand, why did I lose 41 pips, and if I land anything on that trade. Now, as you can see, I include comments on each and every trade that I take, and this 41 pips here, this is a funny thing. It says girlfriend came at me with distractions I couldn't resist. I forgot to take some profits off the markets, and so I paid for it, right? But my point here is keeping a trading journal, guys, is really important, because at a glance you can just see your performance here. But I hope this video was helpful for you guys in terms of calculating risk, because if you are still using the same lot size on each and every trade, regardless of what pair you are trading, regardless of what account balance you have, then you're gonna find it really hard to make money in these markets. In fact, you're gonna find it really impossible. But it's Afonso with Afonso Analysis. Please smash the like button and subscribe to my channel. But I'll be back with another banger.